Does anyone come up with a balance for the cash received? How much? 6,000. You could be right. Let's have a look. First thing is we have to put in our opening balance. So the opening balance goes on the debit side, closing balance on the credit side. Then we put our sales revenue also on the debit side because it's increasing the amount that's owed to us. And we offset that with our allowance for doubtful debts of 1,000. Then we add up the totals. So on this side it comes to 10,000. This side only 4,000. So clearly there has to be a balancing item on the credit side, and it is the cash received, which works out to be 6,000. So that comes in here. Okay. Does anyone not see that? I saw when I walked around, I saw some people putting it on the wrong side. The opening balance on the credit side and the closing balance on the debit side. All right. Make sure you remember that your opening balance for accounts receivable always goes on the debit side, and for accounts payable it always goes on the credit side, and the closing balance is just the opposite. Okay, are we all done with that slide? Okay, all right, let's look at the next one. So what happens when we recover a bad debt? So let's say we have written this guy off as a bad debt because it's unlikely we're going to get money from him, and then all of a sudden, out of the blue, we receive a payment, unexpected. How do we treat it? Well, we treat it as a reversal, right? Because it's money that we'd written off, and then we have to bring it back into our books. So let's say, for example, the administrators have declared that we're going to get 20 cents in the dollar. Previously, we might have been told we're going to get nothing. And all of a sudden, we're going to get 1/5 of our money back. So we have to reinstate the debt to start with and reverse the allowance that we'd created. And then we record the amount of cash that we have received from the debtor. And we then reduce the accounts receivable by that amount. So in this case, we don't adjust our bad debts expense at all. The other thing about the recovery of bad debt, sometimes, again, this goes against our matching principle, because we can write off a bad debt in one period and then get the money recovered in the next. But that's unfortunate because sometimes there's things that happen that we'd have no knowledge of. All right, here's a task for you people. The administrators advise that Myopod on the 15th of July, 10% of the 40,000 written off can be repaid as a partial payment. The amount is then subsequently received on the 1st of July. Prepare the journal entries to record those transactions. Okay, so I'll give you 5 minutes to do that. All right, let's have a look at what you should have done. So 10% of 40,000 is 4,000. So we debit our accounts receivable and credit our allowance. So we're writing back the amount, and then we're receiving the amount from the administrator. So we then debit the cash and credit our accounts receivable. So you can see that these two amounts offset each other. We create the debt again, knowing that we're going to get paid shortly, and then when we do get paid, we credit the accounts receivable and debit our cash. All right, so the next thing that we're going to look at is a comprehensive example, putting everything into one big illustration. So we have a company called Luxury Escapes, and they have an accounts receivable ledger of 89,500. An allowance for their doubtful debts is 4,350. They had sales, cash and credit, a bad debts expense, payments. They had an amount written off as uncollectible, and they also had an allowance for doubtful debts at year end of 7,100. So they ask us to do the journal entries and also complete the accounts receivable and allowance ledgers, and finally do a balance sheet extract. All right, so that should take you at least 10 minutes, I would think. So we'll allow 10 minutes, so it's about 7:05. So about 7:15, we'll go through it. Some of you are not doing these exercises, I notice, as I walk around. It's for your own benefit that we do them in class, because a few years ago when I ran these classes, people complained. They said they wanted more working class, right? They didn't want to hear my voice for 3 hours, they wanted more working class, so we put more exercises and people still don't want to do it. So I don't know, you're a fickle lot. Anyway, if you want to do it, you can do it. If you don't want to do it, then it's up to you. Right, I'll just give you a couple of minutes more. Have you finished, have you? You have? All right, excellent. All right, don't think anyone else has, but I'll just give people a few more minutes just in case they are going to finish. All right, I think we've given you long enough, so let's go through the journal entries first of all. So we'll do them according to the numbers here, A, B, C, D and E. So the first one is to record the cash and credit sales. So we've done this before. We debit the cash and we do that with the amount of cash that was received from the cash sales, 117,500. And with the credit sales, we debit the accounts receivable with 410,000, and the aggregate sales altogether come to 527,500. The next thing that we need to record is the bad debts expense, which was 4% of the credit sales only. Now, some people took all the sales. As I walked around, I noticed some people were doing that, and that's not right. You take it only of the credit sales, because the cash sales the money's already been received, so you don't have to do a bad debts expense for that. So it works out to be 16,400. We debit the expense and credit the allowance. The third one is the payments that we receive from the debtors. So the amounts that we calculated as being received was 381,000. So we reduce our accounts receivable by that accordingly. Any questions so far? No? All right, excellent. And then we come to step 4, where we do our bad debt write-off. So we had an allowance which we need to debit, 14,800. And obviously we need to credit our accounts receivable with the same. And then the last thing that we need to do is to adjust our balance for the allowance of doubtful debts. So our calculation comes to 1,150, and we'll have a look at how that calculation came about. So let's look at the numbers. So we started off with an opening balance of 4,350. We then created an additional provision of 16,400. So that gives us roughly 20,000. We take away the amount that was uncollectible that we've written off. All right, so we're down to about 5,000 now. And that's our current balance, all right? That's what we have after making those adjustments. But management said they want 7,100. So we take one away from the other, and it means that we need to do an additional allowance of 1,150. Did you all get that? Yep. All right. So that's why we do our journal entry for that amount. Second task was to do the ledger postings. So we do exactly what we'd done previously, putting our opening balance on the debit side, closing balance on the credit, entering our sales revenue and our payments and our allowance, and they both debits and credits agree. With our allowance for doubtful debts, obviously the opening balance is on the credit side because this is a credit account. Our closing balance is on the debit side. And then we have our bad and doubtful debt expense that we have written off during the year. And our adjustment to the accounts receivable and our journal adjustment so that our closing balance is 7,100. And obviously both sides agree there as well. Just wait while a few people are jotting down some numbers, and then we'll move on to the next one, which is the balance sheet representation. So obviously with our balance sheet representation, we have to take the closing balance of our accounts receivable and subtract the closing balance of our allowance to give us the net accounts receivable. So that is our balance for the previous year. So our net receivables for the previous year was 85,150, and as a percentage it comes to 4.86. This year we had 103,700 less our allowance, so our net receivables have gone up to 96,600. As a percentage it's quite a bit higher, about 2% higher, at 6.8. Okay. All right, let's move on to the next thing, and that is GST. So this is the last thing that we're going to be talking about tonight. So I presume all of you have heard of GST. Anyone that hasn't heard of it? Right, you must be living under a rock if you haven't heard of GST, because it's pretty much something that we have to deal with these days, and no matter what country we come from. We've only had it in Australia for about probably 15 years, but we were one of the last countries, I think, in the world to adopt GST. And it is a tax that the government levy on certain goods and services. So we're going to have a look at the items that are subject to GST in a moment. but the current percentage that we have is 10%. In other countries it's different, all right? It varies. Some are as much as 20% and some are a lot less than 10%. I'm not sure what the lowest rate is, but I've been to some countries where I've seen it 5. I don't know if it's any lower than that in other countries. But now how it works is that companies that charge for their services register for GST. Now you don't have to register for GST. It depends on your turnover. If your turnover is over a certain amount, you must register for GST. If it's less than a certain amount, then you have the option of registering or not. And once you do register, you have to quote your ABN, or Australian Business Number, and then each quarter you have to fill in a reconciliation statement of the GST you've collected and the GST that you've paid, and then you get either money refunded to you or you have to fork out some to the government or the ATO. And that's the way it works. So it's taxed on the end user, so it's the consumer that really pays the GST, even though each way along the channel, each person pays the GST, but they get a credit for it when they on-sell it to someone else. So we said that the net difference gets remitted to the ATO on a quarterly basis, or sometimes they might elect to do it monthly even. The way they do it is through a statement called BAS, or Business Activity Statement, and this is something that the government introduced back in 2000 when they thought that it would be another way of getting some more revenue. So they encourage businesses to basically collect revenue on their behalf. Although there are some businesses that refuse to charge it, right? I know myself, when I get things done around the home and I call a tradie in, and he'll give me 2 prices, one with GST and one without GST. And I say, well, how come you're not charging GST? You know, because I'm looking at it from the ethical point of view. And like we had our roof done last year, and this guy said, oh, if you pay me cash, I won't charge GST. And I said, look, I know that's very attractive, but it's not the right thing to do. All right, I'm an ethical person and I'd prefer to pay the GST, and I'd like you to pay it as well. So I didn't hire him, and I hired someone else who was just as competitive, but charged us GST. So yeah, a lot of tradies try and get around it and keep some of the money for themselves and try and get a bit of extra business, but I think eventually they'll get caught. And some other cash businesses do likewise. Now, these are the exemptions that we have. If it's fresh food, right? So if it's fruit and veggies, no GST. Right? Not cooked, no GST. So if you buy a chicken from the supermarket and it's uncooked, there'll be no GST. If you get a roast chicken that's already been on the rotisserie, you'll pay an extra 10%. Right? That's the way it works. There's no GST on interest. No GST on your water. No GST on your health. Although they did try and introduce that, I think about 12 months ago, but it didn't get very far. No GST on your wages. And no GST on your rent. And also good for you guys, no GST on your tuition. All right, so there's some of the things that are exempt. That's not a complete list, all right? That's just some of the exemptions, of course. I think if you go to the supermarket these days, and if you look at your docket, and I'm sure all of you have at some stage, they will highlight the items that are subject to GST, and they'll tell you on your docket exactly how much GST you've paid. All right, so let's have a look at an example of how it actually works in practice. And you need to pay attention here, because I can tell you that GST often appears on the exams and it's notoriously badly answered, right? Really badly answered, right? When I marked the exams the last couple of trimesters, this question was far and away the worst one of all, all right? So please pay attention, put your thinking caps on and listen very carefully. Right, so let's look at the example we have here. Retailer purchases inventory on credit for $440, including $40 of GST. So how much is the net purchase? How much is the net purchase? 400, correct. Okay, because to work out the GST, we take 10% of it, and then we add it to that, and that's how we get 440. To calculate the GST, if we've got total purchases of 440, we divide by 11. All right? And the journal entry to record this is to debit our inventory with 400, debit the GST with 40, and credit our accounts payable with 440. Okay, next one. The retailer this time sells inventory for cash for $550, including GST. So again, we divide by 11 and find out that our sales are 500, the GST is 50, and the total amount that we collect is 550, which is debited. All right, last one is to work out the amount of GST that's collected and remitted to the tax office. How much do we remit? Well, if we've collected 50 and we've paid 40, we have to send off $10, don't we? All right? It's the difference between the two. So we debit our GST account with 10 and credit our bank account with the same. Now we call this a clearing account. Do we all know what a clearing account is? It's one that has debits and credits in it. It might be a liability when we owe money to the tax office, and it might be an asset when the tax office owe us money. So it can fluctuate from one to the other. Now you also will need to do GST in your assignment, right? You're going to do a computer assignment shortly, right? I think it's, when, next week, is it? Or starts on the 8th of May, is it? Yeah, okay, so it's coming up soon. And that will have GST in it, right? So you'll need to understand how to account for it. And again, I can say when I mark those, a lot of people don't know how to deal with it. There is some videos that we've put up, and Ali's posted them on the cloud, which will help you. So if you still don't understand it after tonight, have a look at those videos. I'm sure that will help to reinforce the principles. All right, let's have a look at this other example we have here. So let's assume we have a manufacturer called X, Y, and Z, and they sell books to the retailer who is DUSA for $1,000, including GST, sorry, not including, but plus GST. So the amount that they charge them is $1,100. Right, so we have the manufacturer over here, transfers the inventory to the retailer, who then pays the manufacturer $1,100. $1,000 for the books and $100 for the GST. Right, so that's the amount that the publisher has, and he sends that off to the ATO. Right, and then we have the DUSA, who sells their books to students for $1,500. Although in DUSA's case, it'd probably be more than that. Probably $2,000 would be about the figure that they would charge. But that includes GST, so the amount would be $1,650. So they have collected $150 worth of GST, and that has been borne by the consumer. So DUSA have paid $100 GST to the publisher, and they've collected $150 from the consumer, so they have to pay the balance, which is an extra $50 to the ATO. So the ATO is now going to get $150, which is $100 from the manufacturer and $50 from the retailer, giving them $150 in total. Does everyone understand that? Anyone that doesn't, put your hand up and I'll explain it again. No? All right, that's good. So the amount of GST that was charged to the customer is obviously $150. So the business isn't better or worse off, it's the consumer that is. Right, here's a little task for you guys. Record the journal entries for the following transactions: selling goods, receiving money, and writing off uncollectible amounts with GST. Okay, so I'll give you about, let's say, 5 minutes to do that. Hopefully you can finish it in that time, and then we'll go through it. Okay, I think you've had long enough to tackle that. So let's see how you fared. So let's look at the first one on the 1st of May, selling the goods. So we have to record the sale and the cost of the sale, don't we? Right? Because the cost of the sale was $32,000 as well. So the GST obviously is, we find by dividing that by 11 at 5,200. The sales revenue becomes 52,000 even. The cost of the goods sold is 32,000 and the inventory is the same. Right, so the next thing that we need to do is to work out the amount that was received from Brandon. Now we have to take into consideration the discount, because here it tells us that if he pays within 15 days, he'll get 2% discount. So he did. He paid within a week. So therefore he gets his discount. So the discount means that he only pays us 56,056 instead of 57,200. So the total discount is 1,040, and the adjustment of the GST. Now we have to do an adjustment for the GST because otherwise the GST would be incorrectly stated. Because if we're not getting the full amount from him, the GST is based on the net amount, right? Not the gross amount. So we have to adjust the discount by the amount of the GST, so we divide that by 11 and we get 104. And then our accounts receivable balances out to 57,200. Is everyone following so far? Did anyone get it right though so far? No? Okay. All right, let's go to the last one on the 9th of May, where we write off our uncollectible accounts receivables of 22,000. So obviously this includes GST as well. So the account receivable is 22,000, the GST is 2, and our allowance is adjusted by an even 20,000. Okay, let's move on to the next thing. So we've got some more entries here. In the essence of time, I think I'll just go through them because we've only got about another 5 minutes before the recording runs out. So you try them again at home, all right? I want you to do them yourself because you really do need a lot of practice with GST. It's not something that's really easy. On the 10th of May, we've got returns of goods that were damaged. We've got purchasing of inventory, and we've got payments owing to the supplier, and then we've also got a purchase of a computer. Right, so let's have a look at the entries for those guys. So for the first one, returns, our accounts payable gets adjusted by 2,640. The GST on that, right, which we divide by 11 and we get 240. So therefore our inventory was actually 2,400. The 11th, we had more purchases, including GST, so the GST works out to be 6,000, and we credit our accounts payable with the full amount. On the 15th, we paid the amount owing to Ben, so we paid it within 4 days. So we're going to take advantage of our discount here of 1%. So the discount works out to be 600. And of course we have to adjust our GST on that. So 10% of that is 60. So the amount of cash that we have to actually fork out is 65,340. And the last one is the purchase of the computer, which included GST as well. So the GST was 240 on that, and the amount that we paid on credit was 2,640. All right, does anyone have any questions on any of those transactions? Okay, all right, well, let's move on. We've got some further GST entries here. Issued capital, 600,000. Wages, repayment of a loan, dividends, interest revenue and wages. All right, now some of these will have adjustments for GST and some won't. So we have to be very careful looking at our exemptions. So the first one is the share capital. Obviously there's no GST on that. So it's just a matter of debiting the cash and crediting share capital. On the 17th of May, repayments to the bank, 50,000. Debit the bank loan and credit the bank. Again, no GST. Dividends, 40,000. All right, they get paid out of retained earnings and come out of our bank account, but no GST. On the 19th, interest revenue was received for $800 and no GST on that one either. And finally, wages were paid for $4,000. We did have a PAYG, which stands for pay as you go, which is like your income tax. That was 1,000, and the total amount that we paid our people was 3,000, and 1,000 would go to the tax office. So there's no GST on that, only the PAYG. Okay, some other final entries here. Cash sales and advertising and more final reconciliations of the GST. So on the 21st, we had our cash sales of 3,750 plus 10% for GST gives us 4,125. So the amount of GST was 375 and our sales revenue was 3,750. The cost of the goods we're told was 1,300, and we credit our inventory with the same. On the 23rd of May, we have our accounts payable of 10,000 being settled in full, no GST on that. On the 26th, we paid advertising All right, we have GST on that of 10%. So we actually paid $1,100 for that one. And on the 30th, we have to calculate our final amount of GST we either paid or received from the ATO.